Picture a wife who just lost her husband. They'd done everything right, saved for years, stayed out of debt, planned it all out together. The year after he passes, she sits down to do her taxes, and her income has actually dropped. There's about a fifth less coming into the house than the year before, so her tax bill should be smaller. Instead, it comes back more than double what the two of them used to pay together. Same house, a fifth less coming in, more than twice the tax. Nobody warned her this was coming. And here's the hard part, friend. If you are married, this is coming for one of you someday. It lands on whoever is left, but it is so much easier to soften while you are both still here. Now, here's the first thing I want you to hear, and I want you to hear it before anything else. What happened to her is not a mistake she made. She didn't miss a form. She didn't do a single thing wrong. The tax code is simply built to treat the survivor as a single person on almost the same income, and it stays quiet about that until the year it lands. So if you have never once thought about this, you are far from the only one. This is just not the sort of thing anybody sits a married couple down and explains. Here's the shape of the whole thing, and once you see the shape, the rest is just filling it in. When one spouse dies, the household income usually does not fall by half. Not close. The survivor keeps the larger of the couple's two Social Security checks. The smaller one simply stops. That's the Social Security rule. You get the higher of the two benefits, never both of them. And the money coming out of the retirement accounts, that keeps right on coming too, so the income mostly holds up. But three things do get cut, roughly in half, all in the same year: the tax brackets, the standard deduction, and a brand new deduction for seniors. Three shields, all cut down at once, while the income holds up. Now you might be thinking, hold on, if she keeps most of the income but loses half of those shields, doesn't that just mean she owes more tax on the very same money? That's it. That's the whole thing, right there. You already understand it. Let me just walk you through the three of them, slowly, so you can see each one for yourself. Shield number one is the tax brackets. For 2026, there are 7 tax rates, and not one of them changes when your spouse dies. 10%, 12, 22, 24, and on up from there. What changes is how much of your income fits inside each one. A married couple filing jointly gets a wide bracket at every step. A single person gets a bracket about half as wide. So take the very same income Frank and Diane used to report together. On Diane's single return, that same income climbs faster. It fills up the low brackets and spills over into a higher rate much sooner. Let me say that the slow way. Her income did not go up. The rate on it did, just because she's filing alone now. I know that's a lot of arithmetic for one sitting. Set that down for a moment, friend. You don't have to carry all the numbers. You just have to carry the shape. Single brackets are half as wide, so the very same dollar gets taxed harder. Shield number 2 is the standard deduction. That's the chunk of your income the government simply doesn't tax at all. Under the 2026 figures, a married couple filing jointly gets a standard deduction of $32,200. A single person gets $16,100, exactly half of it. Now, there's a little extra added on for being 65 or older, and here's a small kindness tucked in the code. That extra is actually a bit bigger for a single person, $2,050, versus $1,650 for each married spouse. But it comes nowhere near closing the gap. So add it all up. Frank and Diane, both over 65, filing together, took a standard deduction of about $35,500. The year after Frank passed, Diane, same age, same house, takes about $18,150. Her shield fell by almost half. And there's a third shield. It's the newest one. Most folks haven't even heard of it yet, and it's the one sitting on a clock. Stay with me for this one, because it's where a little bit of planning does the most good of all. Quick reminder, friend, this is for education only, not tax or financial advice. Run your own numbers or sit down with a qualified professional before you make any move. Shield number 3 is the new senior deduction. Under current law, for the tax years 2025 through 2028, anyone 65 or older gets an extra $6,000 deduction. A married couple, both over 65, gets $12,000 of it. When one spouse dies, the survivor drops from $12,000 down to $6,000. But here's the part that really bites. This deduction fades away once your income climbs too high, and the line where it starts fading is cut in half for a single person. For a couple, it doesn't start fading until $150,000 of income. For a single person, it starts at $75,000. So a single filer doesn't just lose half of this deduction. The fade-out line itself sits at half the income. So a survivor with enough coming out of their retirement accounts can start losing it faster than a couple ever would on the very same money. Now, does all of this hit the moment a spouse passes? Or the next year? Good question. The year your spouse dies, you can still file jointly, and that's the last year you can. It's the very next year that everything switches over to single. So now, go on back up to the top. Diane's income fell by only about a fifth. She kept Frank's larger Social Security check, and the retirement withdrawals kept coming. But in that same year, all 3 shields, the brackets, the standard deduction, and the senior deduction, were cut roughly in half at the very same time. Same money, half the protection. That is why her bill more than doubled. That's the survivor's tax jump, and now you can see every single piece of it. Let me put real numbers on Frank and Diane, so it isn't just theory. The year before, together, their income was about $95,000. Frank's Social Security, Diane's smaller Social Security, and about $40,000 of required withdrawals from their retirement account. Now, only part of Social Security ever gets taxed. We've walked through that on its own. And once you stack up all their deductions, the standard deduction, the extra for being over 65, and that new senior deduction, about $47,500 all together, there was very little income left to tax at all. Filing jointly, sitting down in the lowest bracket, their whole federal tax bill came to only about $2,000. Then Frank passed. The next year, Diane's income dropped by only about a fifth. She kept Frank's Social Security, the larger of the two, and lost her own smaller one, and the required withdrawals kept coming because that account is still hers. So she came in around $77,000, down from the $95,000 the two of them had together. But now she files as a single person, and 2 things happen at the same time. Her deductions get cut nearly in half, down to about $24,000. And a bigger share of her Social Security becomes taxable because those single thresholds are lower than the married ones. So even though her income fell by a fifth, the amount she's actually taxed on more than doubles. It climbs up out of the 10% bracket and well into the 12%. Her federal tax bill comes to close to $5,000. Look at that. The same house, a fifth less money, and a tax bill that went from about $2,000 to nearly $5,000. That's the survivor's jump, right there in one kitchen table. And you might be wondering, what if there were young children still at home? Would that change things? It would. If a survivor has a dependent child living with them, they can hold on to the joint brackets and the bigger standard deduction for up to 2 more years. It's called qualifying surviving spouse. But for most couples in their 70s, the children are grown and gone, and the switch to single comes the very next year. Now, I don't tell you any of this to frighten you, and I surely don't tell you to make anybody nervous about doing their taxes. I tell you because this is a knowable thing. It's sitting right there in plain sight, and a couple that can see it coming is in a completely different spot than one that gets ambushed by it. Diane's number was Diane's own. Yours will be your own. The point is only that you get to look at it ahead of time. So what can a couple actually do with this while they're both still here? I'm not going to tell you what to do. Every household is different, and this is your decision to make. But I can tell you what the rules allow and let you take it from there. Some couples use the years while they're both alive and both still sitting in those wide joint brackets to be deliberate about which accounts they draw from and when. Some look at moving a little money, a bit at a time, out of the tax-deferred bucket and into the tax-free bucket, so there's less sitting in the account that drives those required withdrawals for the survivor down the road. Whether that fits your situation is a question only your own numbers can answer, alongside someone qualified. If you watched our video on the cheapest years to move money out of a traditional retirement account, this is the very reason that window matters. And if you saw the one on which account to spend down first, it connects right here too. And one quiet thing to keep in the back of your mind: filing as a single person can also pull more of your Social Security into being taxed, and it can nudge your Medicare premiums up sooner, both things we've walked through on their own. For a survivor, they all lean the same direction. Here's one small thing you can do this week if you'd like to. Pull out last year's tax return. Find the line that says taxable income and find the bracket it's sitting in. Then look at how much room is left in that joint bracket before you tip into the next rate. That gap, that unused room, is something a couple has while they're both here, and it quietly closes the day the return goes from joint to single. You don't have to do a thing with that number today. Just go and look at it. Now I want to be clear with you, the way a good neighbor should be. Everything I've shared today is for education, to help you ask smarter questions. It is not financial, tax, or legal advice. Your situation is your own. So before you lock in any decision, sit down with a qualified professional and walk through your specific numbers. If this helped you see something you hadn't seen before, do me a favor and leave the word "alone" down in the comments. It helps me know this one landed, and it helps YouTube carry it to another couple who needs it. And if you'd like the one-page breakdown of those 3 buckets we keep coming back to, it's linked right below, free. There's one more piece of this I want to give you another day. The single most important choice a couple makes together, years ahead of time, to protect whoever ends up alone, how and when each of you claims Social Security. But that's a video for another day. Take care of each other.